Goodbye to 2022. That's what I want to do. I want to say goodbye to 2022. Let's start focusing on 2023. So, I want to talk today about the opportunities that we have. Because right now, as a prospective home buyer or investor, I'm uncomfortable. I'm hearing things in the news that are talking about a bubble or loss of value. I don't want to buy at the top. I'm feeling stressed by my peers or my significant other, or maybe even my real estate agent or lender. I'm feeling pressured that I should do something today, but I want to wait. Well, I'm all in because I do agree that there's fear in the market. And as much as I love this kind of market for the opportunities it brings buyers to negotiate, I respect and understand the feeling that it brings. So, if we want to say goodbye to 2022 and simply look forward to 2023 and ensure that we don't miss the mark again, because when rates drop, there will be pressure from demand, lifting home prices again, creating more creating more multiple bidding situations and putting buyers again at a disadvantage. You know what else you don't want to miss out on? Is the 115% gain that real estate had in the last 10 years. Yes, we've lost 1.5% most recently, and we'll probably lose a little bit more. And I can go into conversations around what if we did lose 10% or 15%. Interestingly enough, there's not a lot of loss that happens if we do that beyond buyers that bought earlier this year in 2022. And albeit buyers that bought earlier this year are at a disadvantage, the advantage is simply time. It's not to sell. It's simply to know that real estate is a long game, that over time it always rebounds. So don't miss out on the 115% gain that we had over the last 10 years, including the small drop. Interesting stat, if you put 10% down, that's a 1,150% gain on your down payment. That's something you don't want to do twice. So let's talk about 3 ways to get prepared for 2023 today. Because you don't even have to buy in January of 2023. I mean, it could be December. It is about putting yourself in a position where when the opportunity presents, you have the ability to take advantage of that opportunity or not. It's not even about pressuring that 2023 is the year you have to buy. It's about stop paying rent, stop paying somebody else's mortgage, start building your own long-term wealth and opportunities, and even create future income and appreciation opportunities in an investment conversation that we're not going to have today. But we're going to talk about these 3 things. These 3 things that you want to do, if nothing else, to simply be prepared, to be ready, to say goodbye to 2022 and be ready to take advantage of opportunities in 2023. Bye, Felicia. Right, here we go. So 3 things. Number 1, know your credit. Did you know that by raising your credit score, you'll get a better and lower interest rate, which will increase your purchase price? So you're telling me that if I spend a little bit of time working on my credit, I can actually buy a bigger home? Yes. I'm telling you that knowing your credit today gives you the runway to fix it. Now, you might have perfect credit, and maybe you're like, I don't need to check my credit, but maybe you do. You know the amount of scams and fraud that's going on right now? When's the last time you checked? You might think you have an 800 credit score, but you don't know what's happened while you weren't watching. So, did something land on your credit report? Did a medical collection that you didn't even know about? Maybe you went to the dentist, never got the bill, and they put a collection on your report, which dropped your score. You want to give yourself time because time can fix a lot of things. You want to know what you need to pay off, how much you need to pay off, what to keep open. Maybe you need to open up another credit card. Maybe you need to work with, we have an in-house credit optimization team. Maybe you need to increase your score just simply so you can get a better interest rate, so you can tip that purchase price just enough to land that home of your dreams. Because we all know home prices have been going up. And even if they slide back a little, you're not going to slide all the way back to where we were 2 years ago. And if you've been renting, waiting for the bubble to burst, you're going to be waiting a long time and miss an opportunity to continue to gain wealth. So number one, know your credit. Number two, know your numbers. Know your numbers. What's your income? I can't tell you how many self-employed borrowers I talk to who don't know their income. They know their gross receipts. They can even tell you about what they spend. But when it comes to the bottom line, their CPA has gotten super creative and given them the least amount of income to pay the least amount of taxes. Well, that's all fine and good as long as you don't want to buy a home. So know what your numbers are. Know what the numbers are that I as a lender will be looking at. Especially do it before tax season. Because if I can look at a draft tax return, or you've got a month left, is there something that you can do to increase your income or deduct more or less expenses, something you can adjust? Or even when those draft tax returns are done, I can't create income, but some of those expenses, do they need to go over a number of years? I am not a CPA, but what I can tell you is what that net income that your CPA has calculated for you is the number that I'm going to use to qualify you. And that number will qualify you for an X-sized purchase price. And if that's not the purchase price you want, now is the time to have the conversation about what adjustments might or might not need to happen. Also, in knowing your numbers is what's your bonuses look like, your commission income, or your overtime, or maybe your consistency of hours. Especially around the holidays, if you're working an hourly job and you're taking unpaid leave, do you realize that that's going to hurt your ability to qualify because I have to use your average income based on your average hours worked, and you just took a week of unpaid leave off, which drops that number and could be the very thing between you qualifying and not qualifying. Wouldn't you like to have a heads up about that? Or going back to your debts, we just talked about that. What about some of those debts that really do need to be paid off? Because you don't want to go through and pay off everything, because some of those longer standing debts could really help boost your credit score. But some of those big monthly nut debts could hurt your eligibility. So knowing which ones to pay and which ones not to pay, or which ones to pay down, really could impact your ability to purchase that home. You also want to know what your budget is. When I'm talking about knowing your numbers, I'm talking about understanding what is your income, what is your debt load, and then ultimately not what you qualify for, but what is your budget? I mean, it's okay if you qualify for a $4,000 a month house, but if your household budget really only allows for a $3,000 a month house payment, that's going to restrict the purchase price, or it's going to require a greater down payment. Wouldn't it be good to know your numbers before you find the house of your dreams? And then number 3, know your options. Down payment assistance was not widely used during the last 2 years. But we are absolutely making up for it now, helping first-time home buyers negotiate lower purchase prices, inspection items to be repaired, seller credits, and using down payment assistance. It can get you into a home now, because if you wait too long and interest rates drop and demand comes back in the market, which it will, I mean, we can't kid ourselves. There's limited supply. And there is a massive number, the largest age group today is 31. There's a massive number of average first-time home buyers just waiting for the market to stabilize so that they feel comfortable again getting into the market. So knowing your options helps you take advantage of those options. If down payment assistance is really the option that you want to take the most advantage of, wouldn't it be good to know that maybe you want to get in the earlier part of the year before the demand really kicks in? Or maybe you wait all the way until the end of next year until the demand slows down after the kids go back to school. Do you know we also have asset-based loans now where we can use liquid accounts, non-employment related, which is a huge limitation on Fannie Mae and Freddie Mac. But we can use asset-based. So maybe you sold off a bunch of cryptocurrency, or you have money in non-retirement investment accounts, or you have money, maybe you had a grandparent who passed and you have money sitting in a trust account or a savings account. We can use assets divided by 120, which is only 10 years, which that shorter period gives a larger monthly income, which is calculated from your assets, which can qualify you for a home. So we have that, and bridge loans, and stated, or not stated, but bank statement loans. We have DSCR, which is based on investment properties and using the investment rental income. Knowing your options, besides what everybody thinks is a standard loan, whether it's FHA or conventional, or VA if you're a veteran, thank you for serving, or USDA if you're a rural, or jumbo, which the jumbo loan limits or the conforming loan limits just went higher, allowing for more people to get into conforming, which is massive. Knowing which buckets you fit into best is going to help you to plan strategically for 2023 and not get pigeonholed into somebody else's idea of what's best for you. Well, I need 20% down. I need an 800 credit score. I have to be on the job for 2 years. All the things that might or might not be true. Don't allow what you think is true to limit your ability to get into a home and start building real wealth, lasting wealth. So say goodbye to 2022, put those fears aside, focus on the opportunities and the possibilities that 2023 brings. And please, if you do nothing else, call your lender. Bye, guys. Have a great day.